Hey guys, how's it going? It's Andy from MagooInvesting. Today we're going to be continuing the Robinhood Top Stock series, and today we're going to be finishing off the week with Qualcomm, ticker symbol QCOM. And so this was a requested topic, so thanks for that. And if you'd like me to go over any stocks that you're curious about, please leave them in the comment section down below, and I'd love to get to them next week. So it's been a couple days since this has been requested, and I was going to record this yesterday, but I kind of held back. Yesterday earnings came out, or actually the day I'm recording this on Thursday, earnings came out after yesterday. And so after the earnings came out, the stock has since jumped. And so I didn't really want to make any judgments, do any analysis of the stock until that movement has happened. And since it beat revenue, it beat earnings, the stock was up almost 7% today. So that's just something to keep in mind. My type of trading is I look for stocks that have been hit after poor earnings. So this is not exactly the type of stock I'm looking for, but for a company that's preparing itself to be one of the top 5G companies out there, it's worth taking a look at. After doing some research on some of its competitors like Ericsson, Verizon, and then the Chinese giant, I don't see a lot of opportunities there right now. Most of them are sitting close to their 52-week highs, which is not super attractive to me. So for a short-term swing trade, I don't see a lot of potential there. But for long-term, with 5G coming out in the next couple years, I think it's a very good option. And of course, I've got to say that I'm not a licensed financial advisor, so I'd highly recommend doing your own research, talking to a professional, someone that can find you the best places to put your money going forward. So now let's head on over to the computer and we'll talk about Qualcomm, ticker symbol QCOM. All right, so here we are on Robinhood. Today we're going to be talking about Qualcomm. As you can see, my portfolio has been very boring today. We'll go to the 1 week. It's up just a little bit. Pretty boring. I guess that's what happens when I take positions in companies that don't move as much as, say, a 3 times leverage ETF. But just a little bit about that. Now let's take a look at Qualcomm, ticker symbol QCOM. And so as you can see, earnings were very good to it. It's sitting around up 7.5% today. It's kind of faded from its highs, but it's holding pretty well up there. With 17,000 people owning it on Robinhood, not super popular, but for a telecommunications company, kind of expected. Not the type of sexy stocks that people like to invest in on Robinhood, stuff like Disney, all the weed stocks, because those are very popular for some reason. So on here, it has a dividend yield of 3.3, which is pretty decent. It's probably one of the higher ones we've seen since we've talked about AT&T. And then when we go down here, here's the earnings history. And as you can see, it has beat its earnings every time since Q2 of 2018. So that's a pretty good history of beating the expectations. So that came out yesterday. That's why the stock is up 7.5% today. Now let's take a look on the computer. So I'm going to go to my favorite chart, the 180-day 4-hour chart. And so when I looked at this yesterday, the first thing that I was looking to see, I drew lines up here. And I was looking to see if the earnings would be enough to push it above this all-time high. And so based off of what it did yesterday, it did. And so it pushed up a high, and then it came back. It looks like it retested this zone and then pushed above it, and it's held since then. So that's a good sign that it's broken through that zone. Let's zoom out a little bit. After that, we'll draw that as a zone. And let's see if I see anything else important. We'll call that. So those are just kind of the quick zones that I see on here. Kind of the problem that I'm seeing, and if you've seen any of my videos before, being at an all-time high, there's not really anything to chart up here. All these zones that I've drawn are based off of previous price action, and when you're at an all-time high, there's nothing really else to go off of. So as we go back here, the price was at $80 in 2014. And so back 10 years, or back to 2009, it was sitting at $50, and now it's at $90. And so compared to some of the large companies that we've talked about recently that have great track records, think Zynga, Disney, that type of stuff, Qualcomm has been not as reliable. And so you have a lot of movement based off of the earnings. You can see a gap down here, gap up, huge gap up, gap down, and another gap up. So this stock seems to move a lot based off of earnings. As you can see, all of the spikes and the volume are all from earnings. So it looks like the volatility is going to start to slow down now that earnings are done. Just something to keep in mind. But going forward, this is not a stock I'm super confident about for a long-term play. And so comparing the charts of Qualcomm to, say, a Motorola, you can see why I'd be more confident taking a position in a company like Motorola for the long term, just because look at this price history. It just steadily been going up. And so even though it's sitting at near an all-time high, I'd be confident taking a position here just based off of the track record. When you don't have anything to go off of based off an all-time high, you're kind of looking for the trend. And the trend with Motorola is slowly and steadily going up. And that is very attractive compared to, well, let's go back to Qualcomm. It's just kind of all over the place. And so I don't think it's very attractive for a long-term play just because of that. And then I think this stock has potential for a swing trade. The problem is it's sitting at an all-time high, and it's very hard to swing trade something when you don't have anything else to go off of. So I will be setting an alert for it to come back to this zone, and if it does, then I'll take a look at it, and I will do the same down here. So overall, my opinion of Qualcomm is maybe positive, kind of based off of what I'm seeing. It may be at the end of its range, and I'd be waiting for it to fall before taking a position. It doesn't have the long-term track record that would make me feel confident taking a position above an all-time high. And so I'd be waiting for the stock to fall. It looks like it has done that in the past. It has very aggressive price movement. So probably maybe the next earnings would be an opportunity to enter the stock. If I was in it right now, I would probably get out just based off the fact of I don't know where the stock is going. And at an all-time high, it's hard to be upset selling at an all-time high. And then finally, let's look at the price forecast. And as you can see, it is all over the place. It's up 60% year to date, which is great. It is sitting at its all-time high. But going up for the high of 48% and down for 54%, that's a flip of a coin. And for a long-term investment, not attractive at all. We're looking for stuff that has reliable returns, something that we're pretty confident that if we take a position in now, in the future, it will be in the green. And based off of this, it seems like it's a flip of a coin. And that's more towards gambling than it is for investing. So I would stick away from that for a long-term trade. And then on Yahoo Finance, kind of surprised. They have it as a buy, overvalued, and then up in the short, medium, and long term. So don't exactly agree with them on this one. Maybe they know something I don't. But Qualcomm, interesting stock, had good earnings, and I'm going to be curious to see where it goes in the next couple days. And so overall, Qualcomm is kind of an interesting chart to look at. For a company that's kind of sitting at its 52-week highs, there's been a lot of choppy movement. And I'm assuming this is coming from the trade war stuff with China as they align themselves with the Chinese communication company and put them against Apple. And so they finished that legal battle with Apple. The trade wars are starting to wear off, it seems. And so Qualcomm might be a good option going forward. From doing the research before making this video, there were some analysts that were saying that Qualcomm may have already reached its mark for 5G. And so they're talking about some other 5G companies that are maybe better options. They're talking about Verizon and Marvel. And so those are just some options that you need to take into account. Anytime you're going into a sector that you don't have a lot of experience with, I would be more likely to take a position in one of the local giants, a company that I'm aware of, one that I've used in the past. So Verizon would be that option for me. But if you have more faith in Qualcomm or the Chinese giants or any of the other companies, that's on you. But it's just, I'd highly recommend doing your own research. I'm not super up to date on the whole 5G thing. I know they're starting to release it in the United States, and it's slowly coming out. And from what the price forecast says for Qualcomm, I don't really love that. When you have such a wide range and it's already sitting at its 52-week highs, it kind of seems like a flip of a coin. And so for the type of investing I'd want to do for this type of company, it'd be like a 3 to 6 month hold. It's very possible it could just drop after these earnings and go back to where it was. You just really don't know. There's not a lot of, there's no chart information on the upside to look at to think, oh, maybe this is where the upside could go. That's when you have more of the fundamental traders that are coming in, figuring out what the analysts are thinking. Which is not my type of trading. So this is not a company that I feel super confident at the moment. I would have really liked it for it to lose on earnings, because then it would give me an opportunity to see where it could be dropping to and then take advantage of that. But things went well. It broke its 52-week high, and now it's sitting at a point where I don't have a lot of information. And so overall for Qualcomm, if I wasn't in it right now, I would not be entering anytime soon. I just kind of want to watch, see what happens. Maybe it'll fall. Maybe there'll be an opportunity to take a position at a lower price. But buying at a 52-week high is very risky just because you really have no idea where it could be going. A lot of times a 52-week high is considered a resistance, and breaking through that is a strong move, and with earnings it might continue to push up, but I just don't know. And so if I was looking to get into this sector, I would be looking around, kind of shopping, doing my different options, and kind of figuring out which one has the best upside. Because right now, based off of what the price forecast seems for Qualcomm, it seems like a flip of a coin. And when we're investing, we're trying to find places where we have the best chance of making money going forward, and flip of a coin is more like gambling and less like investing. So let me know what you think of Qualcomm in the comment section down below. And if there's a company or an idea you'd like me to go over in a future video, please leave it down below and I'll get to it as soon as I can. And thanks for watching this video, and I'll see you this weekend when I'm going to make a video talking about my top stocks for the month of November. Thanks for watching.